Hi, good day, my viewers. My name is Kingsley Uten. I'll be taking you through a presentation I made on Power BI, showing us how Power BI could be a very powerful tool in generating insight for decision making. From previous videos, we got to understand that inventory management as well as receivable collection period were serious issues the management would need contend with. So as we see, the business would need to pay attention to these factors. And now let's bring all of these things together and now see how it affects the business. Next, we want to look at if the business is over trading or under trading. To help us understand if the business is over trading, that is taking or carrying on too much trading than it is currently equipped or in position to take, we look at how these various factors combined. Now, a business that is over trading typically would experience growth in sales, a growth of sometimes above 20%, a decline in its gross margin. It will also experience a decline in its retained earning or net profits, by extension its net margin, and this will be largely due to large and larger operating expenses being incurred. Now, in terms of its financial position, it would witness an increased turnover period for its inventory. Its receivable period would be larger. This would likely be because of the controls that have been in place are no longer effective or efficient to contain the new increase in activity. We'll also experience an increase too in the non-current assets as well as its liabilities over time, largely as a result of the efforts to finance this new increase. So in order to make sure they are producing enough, they are investing more into into non-current assets and financing them by liabilities. And then we'll also witness increase in payable and payable period as well. All of these would now be an indicator that the business is over trading in the sense that it is pumping in too much money, incurring too much cost without making an adequate or proportional increase in its profits at the end of the period. Now, what do we see? First, we look at sales growth. We see a very remarkable increase in sales revenue over the years. The business has been able to steadily maintain a growth pattern. We see percentage change in revenue of 79%, 6% here, 49%. So for our growth in sales revenue as an indicator of overtrading, we tick it yes. Next, we look at gross margin. Remember, we said there would also be a decline in gross margin. Coming to our margin report, we see not a decline but an increase. The proportion of gross margin to sales has maintained at least 80% over the period. So decline in gross profits here does not indicate overtrading. Next, we look at decline in retained earning. We see that decline in retained earning over the period, both in terms of percentage to sales and the actual figure. We see it decreasing, and then the gap, the operating margin, has continued to increase from 55, we have it here, to 56, down to 103, down to 83. So this decrease in net profit that we see is largely because of, in an effort for the business to do more, it incurred so much cost in running the business in terms of operations and administration of the business. So this would cause the business profitability to fall significantly. So in terms of decline in net profits, we tick it a yes. The business is showing that symptom. Next, we look at the increased inventory turnover period and receivable period. In terms of the naira value, as shown by the blue color, we saw a steady increase over the years. How about the inventory period shown by the orange color? We also witness an increase over the years. In terms of inventory turnover, business is showing the symptom of overtrading, increasing inventory in the store and also increasing number of days. So we check that as a negative symptom for overtrading. How about receivables? We saw that in terms of the value, it has continued to increase. The naira value increased over the years, largely towards the end of the business. And in terms of the receivable period, starting off at 8 days, it has continued to increase too. So in terms of trade receivable period, we check that as a yes. The business is also showing the symptoms of overtrading. Another symptom to pay attention to is the fact that there will be an increase in payable and payable period. For payable, we saw gradual increase, but then suddenly declined. So, and for the payable period, it had remained at 0. So for this one, we can conclude undecisive and then check it negative. The business is not showing any signs of overtrading as indicated from its payable. And then lastly, another indicator is increase in non-current assets. Now this increase in non-current assets is as a result of the fact that the business is trying to meet up the demand. It will need more machines so as a result we need a whole lot of financing. We see this play out in terms of the non-current assets. We see how it has steadily increased and declined because of the recovery through depreciation, and then towards the end again skyrocketed so much. And this, as we have seen, is being financed from the cash flow of the business, where we saw that even when the business was not making any profit from the previous video, it was still spending a whole lot of money, investing a whole lot of money. So we now see why. It is trying to meet up the demands, the growth it is expecting, and as a result spending or investing so much into its non-current assets. Now all of these indicators clearly show that this business is overtrading. We've seen how it has grown its sales or its revenue so much significantly in each quarter, although it did not experience a decline in gross margin. We saw this decline in the net margin, where its net profit had continued to reduce significantly because of large operating expenses that are being incurred. In terms of the inventory turnover period as well as the receivable period, we saw that these had continued to grow significantly for each of the period. This is largely because while growing its revenue, the managers had not put in place mechanisms to control this growth. Therefore, the former control it had when it began at this point are no longer efficient or sufficient enough to handle the growth that it is currently experiencing. And we also see too that the business exhibited the symptom of increased non-current assets in an effort to get machineries that will be able to meet up the demands. So clearly, all of these show that the business is over trading. So the management would need to slow down a bit, not to slow down making money, but slow down and make sure they, one, check the operating expenses and try to curtail it. Two, make sure that there are sufficient and efficient controls to monitor their inventory and receivables, as well as inventory and receivable period. Three, ensure that it takes care and properly evaluates projects before investing in non-current assets, so that it will not be a case of investing in something that do not have a direct link to the growth of its revenue and by extension its profits after interest and tax, or profits for the year. So indeed, Power BI once again has helped us gotten actionable insights into this business. We now see where the problems are coming from. We've seen over trading as a factor, and as over trading, we've seen that the business does not have efficient control. They're spending too much on operating expenses. They're trying to meet up demand. Their inventory management and trade payable management is poor and will need to be worked on. So the management advised to take action accordingly. Would you like to get actionable insights from your data to grow your business? Power BI can help you do that. And I still remain your Power BI guy, Mr. K. Reach out to me via email, by call, to learn more on how Power BI can contribute to helping you grow your business. You could visit my website or see my LinkedIn profile for more ways that Power BI can help grow your business.